Hello and good evening. So we are looking at introduction to management accounting and the concept of management accounting as part of your ICA level 2 exam. So there are some parts of the syllabus that you need to understand, which includes the first chapter. And in this first chapter, when we look at the syllabus reference, it says we should be able to identify, explain, and apply contemporary approaches and techniques to standard costing of products and services, and explain and comment on the application by paying attention to the ethical issues in management accounting, very important part. And you realize that when we looked at the introductory part, it told us to what? Note these ethical issues because they may form part of regular examination. So we look at the basics and context and the concept of ethics, the fundamental principles of resolving ethical issues, the threats to ethical behavior, and also to identify and explain ethical issues relating to the preparation, presentation, and interpretation of financial information for management of a business, and cost control and cost reduction. Now, when we look at the exam context, it tells us that for the most part, the chapter does not address a specific syllabus competency. It has been written to explain the meaning of strategic planning to provide a foundation for understanding the above and other areas of the syllabus. And in particular, it explains strategic objectives and the different information needs of management at different levels in an organization. So, in addition, it explains how ethical issues might arise during the work performed in performance management, okay, which is the main theme of your management accounting paper. Now, by the end of this chapter, you should know these things, and these things can be put into a question for you. So you must be able to explain the difference between strategic, tactical, and operational planning and control. We must be able to understand the strategic planning process. We must be able to explain the importance of corporate objectives and the link to performance management. We must be able to explain the informational needs for strategic, tactical, and operational management. We should be able to distinguish cost control from cost reduction and be able to identify and resolve ethical dilemmas relating to the preparation, presentation, and interpretation of financial information for the management of a business. Now, we are first going to look at the levels of management. There are three levels of management. So it says in traditionally structured large organizations, there's a hierarchy of managers from senior management down to junior managers and supervisors. So these managers will have their responsibilities different according to their position. And even in small organizations, the nature of management activities can be analyzed into different levels. So there are three levels of decision making that we have to look at, three levels of management, which is the strategic management level, the tactical level, and the operational level of management. So let's look at the strategic management. Now, strategic management is often concerned with deciding on the objectives and strategies for the organization, making or approving long-term plans for the achievement of strategic targets, monitoring actual results to check whether these are in line with strategic targets, and where appropriate, taking control action to bring actual performance back into line with these strategic targets. So these people manage the top, and mostly this includes the board of directors. They set the overall long-term corporate objective, okay? And they will mostly make or approve plans to achieve their long-term target and monitor the actual results that the lower levels are taking into consideration. Then from there, they review and amend the strategies that they have set. So a strategy is a plan for achieving a long-term objective. So the main objective of profit-making entities may be to maximize the wealth of their owners, which is very important. You have to keep this with you because as we go along the line, we'll look at maximization of shareholder wealth and why it is an important objective. So several strategies are selected for the achievement of this main objective, and each individual strategy might have its own specific objective. So strategic planning is often concerned with developing products and markets for long-term investment. Okay, for example, a company seeking to increase its profits by 10% a year for the next 5 years might select the following strategies. Okay, so they may look at their marketing strategy, like to expand into new markets in other countries, to a specific country selected as their planning targets for each year of the plan. We look at innovation strategy, which is to invest in research and development with a target to launch, say, 2 new products on the market each year for the next 5 years. We look at investment strategy to invest in new technology with a target, say, of replacing all existing equipment with new technology within the next 5 years. Okay, so these are some of the things you consider as part of what strategic planning. Now, when it comes to tactical management or the tactical level of management, sometimes we call them strategic business units or the business level of management. Now, tactical management is associated with the efficient and effective use of an organization's resources and the control over expenditure. So, in a large organization, tactical managers are the middle managers, okay? And tactical management is concerned with implementation and control of medium-term plans within the guidelines of the organization's strategic plans. So, for example, budgeting and budgetary control are largely tactical management responsibilities. So, it means that these people will implement whatever has been done by the top level, okay? And mostly they are short to medium term plans within 3 to 5 years. I get it. And they plan within the guidelines of your strategic plans, which has been made by the top level of management. Okay, so they are mostly concerned about budgeting and budgetary control. Okay, responsibilities. Then we have operational management, which is the lower level of management. Now, this operational management is the management of your day-to-day operating activities. So it is usually associated with operational managers and supervisors. So at an operational level, managers need to make sure on a day-to-day basis that they have the resources that they need and that those resources are being used efficiently. So it includes scheduling of operations and monitoring outputs such as daily efficiency levels. So there's no clear dividing line between the tactical and operational management, but essentially the differences are a matter of detail. How detailed is their work? And these people do a lot of detailed work because the day-to-day operations rather than the tactical level who need summarized reports. I get in it. So like the performance of a whole department during a week or a whole part of the segment of the business during a particular period. Whereas the operational management may just be concerned with the activities of individuals, small groups of work like supervisors, foremen, and workers on a daily basis. So each of these levels of the organization need different information. Okay. And now when we look at information, information actually begins with what? Data. You must understand information. Are you getting it? Before you do management accounting, because management accounting requires the use of information, and we'll get there. Now, managers need information to make plans and reach planning decisions, to measure performance and also take control actions on the basis of comparing actual or expected performance with the target, and also to make one-off or non-routine decisions, to also communicate decisions to other people and to coordinate activities with other people. So information should be provided to managers to help them make decisions. The nature of the information that is required varies according to the level of management and the type of decision that we wish to take. So within organizations, there are management information systems that provide this information. So a major element of the overall management information system should be the management accounting system. So we'll be looking at management accounting systems or management information systems in subsequent lectures. Now, a management accounting system should provide information for strategic management, tactical management, and operational management. This is one thing you need to know and understand. Now, the requirements of management for information vary with the level of management. Okay, so you must know what type of information each level of management requires, because this is a suitable exam question. They can ask you to provide it in exam. Now, one thing you should know is that most of the time, the spread of the management accounting questions in your exam are 60% practical or calculation and 40% theory. And this may feature as part of the theory in your exam. So let's look at information that a strategic level requires, okay? And why they require that information. Why do they need information? Okay, so strategic information is information that helps managers, one, to make long-term plans, assess whether long-term planning targets will be met, and also to review existing strategies and make changes or improvement. Now, strategic management needs strategic information, and the characteristics of strategic information may be summarized as follows. So this strategic information is often information about the organization as a whole or a large part of it. They are often in a summary form without too much detail, okay, like summarized reports. It is generally relevant to the long term, between 5 to 10 years or above, 5 to 10 years. It is often forward-looking. The data that is analyzed to provide the information comes from both internal and external sources, from sources inside and outside the organization, and it is prepared on a non-frequent basis. Are you getting it? Rather than something that forms part of a regular and routine report. So it may contain information of a qualitative nature, such as maybe the relationship, staff welfare, and other things. Are you getting it? Then also quantitative information, which has to do with numbers, maybe sales, profits that we want to make in the next 15 years, how we want to grow. All these things are considered. So there's often a high degree of uncertainty in the information because we don't know what will happen in the future because of projections. Okay, we are projecting what is going to happen. It may not be what will actually happen. Okay, so this is particularly true when the information is forward looking. For example, a forecast, so over a number of years in the future. Okay, so mostly uncertain. Then when we come to tactical information, it is information reported to middle managers in a large organization or for the purpose of annual planning and budgetary control. So tactical information is used to decide how the resources of the organization should be used and to monitor how well they are being used. So it is mostly useful to relate tactical information to the sort of information that is contained in an annual budget. So a budget is planning at a tactical management level where the plan is expressed in financial terms. So the general features of tactical information are mostly as follows. So it is often information about individual departments and operations. It is often in summary form, but a greater level of detail than what the strategic level requires. And it is generally relevant to the short term and medium term. It may be forward looking, for example, like medium term plans, but it is often concerned with performance measurement. So control information at the tactical level is often based on historical performance, unlike the strategic level where it is forward looking, looking at future performance. Okay, so the data is analyzed to provide the information. I get it. The data that is analyzed to provide the information comes from both internal and external sources, just like we saw for the strategic level, and it is often prepared on a routine and regular basis. I get it, for example, monthly or weekly performance reports. But at the lower level, they do it on a daily basis. Remember that whatever you collate during on daily basis, you collate them during the week and give to the manager. Okay, so that's the literal difference. And these people may compile the monthly ones into annual reports and send to the strategic level, who then compile and come out with what yearly, 5 yearly, and maybe 10 years reports and other things, okay, which mostly include forecasts. We saw the uncertainty there. So it consists mainly of qualified information, quantified information numbers, and there may be some degree of uncertainty in the information. However, as tactical plans are short-term or medium-term, the level of uncertainty is much less than the strategic level of management, which we saw. And also control reports might typically be prepared every month by the tactical level or the business level, comparing actual results with the budget or target, and much of the information comes from internal sources. So examples of tactical information may be variance reports in a budgetary control system, reports on resource efficiency, such as the productivity of employees, sales reports, reports on sales by product or by customer, and reports on capacity usage. So when it comes to operational information is needed to enable supervisors and front line operational managers to organize and monitor operations and to make on-the-spot decisions whenever operational problems arise. Now, operational information may also be needed by employees to process transactions in the course of their regular work. So the general features of operational information are as follows. One, it is normally information about specific transactions or specific jobs, tasks, daily workloads, individuals, or work groups. So it is task specific. We do specific tasks, right? Because of the day-to-day operations. It may be summarized at a work group or section level, but it is in a more detailed form than the tactical information. It is generally relevant to the very short term, within a year, mostly day to day. So it may be forward looking, for example, your daily plans, what you are going to do every day, but it is often concerned with transactions, procedures, and performance measurement at a daily level. So the data that is analyzed to provide the information comes almost exclusively from both internal sources. I get it. That's sources inside the organization, The external source might be possible, but it's usually very minute, okay? Very small. So mostly we rely on internal sources for the day-to-day information, okay? It consists mainly of quantified information. Most of this information is factual and not concerned with uncertainty. So like a cashier recording, a cashier does not do budgets. A cashier just records what comes in. So it's factual information. Okay, so a cashier may be considered as part of what? The operational management because they do the day-to-day operations. Okay, the one on the field who is maybe producing in the production department doesn't do projection. Whatever material comes in is what he's using to produce. So it's factual. Is that okay? Now, operational information is provided regularly or is available online when required. It is concerned with operational details such as one, the number of employees in the department that are absent from work, wastage rates in production, whether the scheduled workload for the day has been completed, delays and holdups in workflow, and the reasons for the delay, or whether a customer's order will be completed on time. So all these things, we consider them. So in many respects, strategic information, tactical information, and operational information are all concerned with the same things, business plans and actual performance. They are provided in different amounts of detail and with different frequency. However, with the development of IT systems and internal and external databases, it is possible for all levels of information to be available to managers online and on demand. So we have looked at the various levels of management and what their respective responsibilities are. We've also seen their roles and we've also seen the kind of information that they require. Is that okay? So please keep this in mind. And then we are going to move to what? A different section or a different part of the syllabus where we are going to look at management accounting itself and the levels of planning and what goes into management accounting. So